Good evening, everyone. I hope you're doing well. It's been a wild ride for the price of oil. And as per some of my previous videos, we could see that there was a double bottom forming and a breakout coming. And I'll just revisit that very quickly. You can see we're on a daily chart here. This is the high of around $80 a barrel on the 15th of January. And you can see the price of oil was in a downtrend. So I'm going to draw that downtrend line there, although it's pretty obvious to see that a downtrend was in place. You've got this, what you call a sort of a falling, broadening wedge pattern. So that pattern there is typically a bullish pattern. You've got the double bottom here around $55. And if we zoom back enough on this oil chart, you'll see that this is a major low for the price of oil. That was a roughly that was a 4-year low almost. Now, if we zoom in a bit closer, because we're interested in what's happening now, you can see there was positive divergence on the momentum indicators at the double bottom. So if you're an aggressive trader, that was your buy level there at the positive divergence at the double bottom. You were buying this bullish pattern. You were buying the fact that the price of oil from the 15th of January to the 9th or 7th of April had declined 31%. That's a significant decline. Then, of course, I think this $65 level is key. Between $65 and $66. If we draw a line around the $65 level, we can see that it was support in September last year, and you can see lots of buying support there. It happened again in March when the sell-off occurred. Then once it broke through there, broke through with a vengeance. And note that once the support level was broken, it then became resistance on the 22nd of April and around these levels in May. Then what happens? It reaches this level. Now, this is a double bottoming pattern. If it breaks that line, the double bottoming pattern is complete. So notice how that line coincides with the downtrend line. So this was a very significant level, this break of 65, of course, driven by what's going on in, the geopolitical world, Iran, Israel, that sort of thing. But the chart does tell a story. We can see a lot of these pressures building in the chart. And of course, there was a massive spike in oil from the breakout on the 11th of June. We could see in the space of a few days, oil went up 20%. And if we were to take a longer time frame, we could see that from the low on the 2nd of June, oil had a 30% increase. Now, you should be selling something that goes up that quick. Very often when you get these breakouts, you get a return to the scene of the crime. And look at that. That's where we're at yesterday and today. A return to the $65 level, returning to the scene of the crime. And now it's probably time for oil it's testing the breakout, and it's most likely going to do this now. So we've had the sell off now. And for my clients and I, this is a time to maybe shift some of our portfolios, maybe 5% into oil related investments. If you'd like to learn more about these charting techniques or what type of investments I'm looking at, please reach out and chat to me privately. Cheers. Have a good night.